Have you? Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Frederick, Managing Director of Trading and Derivatives at the Charles Schwab Center for Financial Research. We're going to get an update on technical levels to watch in the Nasdaq-100 and also cover the halfway point through earnings season. Randy, it's great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. Great to be back.
And that was quite the reversal of fortune that we saw for stocks in July. And I think part of the narrative was earnings was not as bad as expected. What are your thoughts as we're halfway through the season?
You're right. In fact, this earnings season started out actually pretty shaky. And I would say after when we were about 25–30% of the companies had reported, we were below expectations on both earnings per share and revenues. But somehow last week when, like the bulk of the reports came in and now we're at about a 60% reporting rate, we're well above expectations, both on earnings and on revenues. Now on the beat rates, in terms of how many companies beat earnings expectations or beat revenue expectations, we're still a little bit weak relative to the previous quarter, but on a year-over-year basis, the growth rates are both better. So that's kind of unusual. Most of the time when you're about a quarter to a third of the way in, you kind of have a pretty good picture. This quarter has been unique in that regard, in that some of the companies that reported later, which were a little bit more in the discretionary and technology sector, actually have done better than the earlier reports. So it's quite an interesting season thus far.
Yeah, and we have another busy week again here, too. Of course, we have Nasdaq-100 heavyweight Starbucks reporting. There are a number of consumer names coming out this week. And, of course, we have the all-important jobs report on Friday. The recent JOLTS data shows that employment might be coming in just a bit here. And that's an overarching theme when you think about Fed policy and what's happening with inflation and so forth.
Yeah, and that's not necessarily a bad thing. The Fed's trying to engineer what they call a soft landing. They've been saying that for a long time. I don't think you can bring inflation down without at least a slight impact on the labor market. So if we see fewer jobs opening, it can mean two things. Obviously, it could mean that people are going out and getting those jobs, or it could mean that there are simply fewer jobs available. In other words, the jobs that employers have posted, they've removed. I want to believe that it's more of the latter. And the reason I say that is the consumer has been very strong for a very long time, because in the last 2 years, we've created 40% of the money out there that exists. So huge amounts of fiscal stimulus. That money is starting to run out, I believe. And I also think some of the assistance programs to people who are out of work or who are underpaid and all that are all starting to go away too. We see that in terms of the amount of credit going up. So I want to believe that people are actually going out and finally getting jobs now because they have to. We've proven that if you pay people enough not to work, they won't work. So I have a feeling that maybe they're going and getting jobs. So that being the case, here's what I think is interesting. Probably on Friday, we might see an uptick in the labor force participation rate. That would be a good thing. And in fact, that could cause a slight uptick in the unemployment rate, but it wouldn't be necessarily as bad as people might interpret it to be, because it simply means there are more people out there in the labor force. All in all, that would be a good thing.
Yeah, I'm actually quite surprised just how long the stimulus payments and savings lasted, to be honest with you, considering the spending sprees that many people went on. Let's talk about technical levels and shift gears for a bit here. What are you looking at in the Nasdaq-100?
Well, the Nasdaq-100 and all of the other major market indices are all basically sitting right at either just above or just below their 100-day moving average, which is a good thing because that's the first time in several months we've seen that. So we don't know where they're going to go from here. But as you said, July was a great month, 9% return. In most segments of the market. That's a great turnaround after going into a bear market down 23.5, I think, at the bottom earlier this year. So that's been a pretty nice bounce back. Right now, I think probably things might trend sideways and be a little choppy for a while. But as you know, we're entering that seasonal weak time of the year. Usually that September, October timeframe isn't all that great. And we've got still about half of the earnings season to come into play. But they're pretty much all sitting in a very good spot that if we continue to see some of the data come in strong, like in earnings, and if the economic data only softens slightly, then I think this upside momentum can continue. But I just think at a slightly slower rate than what we saw in July, because we're already at a higher level.
Right. All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.